Today I'm talking about the one element that's often so overlooked in real estate. That is time in the game. Welcome to my channel. For those that have just found me, I cover investing topics such as property investing through to stock market advice. So if you are interested in those topics, make sure you subscribe. I put out 2 to 3 videos a week and love bringing you new content. As a real estate investor, we're so quick to look at what the cash flow on a deal looks like in today's terms, what the likely capital growth might be, but very rarely do we look at what the actual rental growth is looking like into the future. And this is where time really comes into play and is essentially the secret sauce of investing. The great Albert Einstein once said, "Compound interest is the 8th wonder of the world. He who understands it, earns it. He who doesn't, pays it." To illustrate just how powerful time is in a deal, I want to take pretty much a standard property you can buy in Queensland and run through the numbers of what that deal looks like today and then what that deal looks like over time and 10 years into the future. As always, these videos are general in nature. Don't take them as financial advice, blah, 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 blah. So let's take a property worth, say, 400,000 here, which is a pretty standard sort of purchase in regional Queensland. Even some of the outer suburbs of Brisbane, you will pick up a property for around 400,000. And these properties typically return about $400 per week. So this is going to be the baseline for this example I want to run through. So I've got a $400,000 property returning $400 a week. I want to take a look at what that property is returning cash flow wise today and how that will change into the future and make a bit of a prediction of what it might look like in 10 years time. Obviously, with any deal, the better the numbers stack up in the beginning, the better the forecast and the predictions are going to look into the future. So look, a $400,000 property returning $400 a week isn't actually that great a buy, but like I say, it pretty much is what the average is around Queensland. So that's why we're going to run with these numbers for this example. So total outgoings on an average $400,000 property are going to be around $7,372 per annum. So that works out to be $142 per week. Now, the loan repayments in the first year are going to make up quite a substantial chunk of your outgoings, and a big component of that's going to be your interest repayments. Obviously, the longer you pay down that loan over a 30-year period, the bigger part of that loan repayment will actually be going off the principal, and you'll be paying less in interest over time. So once again, the longer you hold on to the property, the smaller your interest repayments will be and the bigger your principal repayments will become until eventually you pay off the property. So for this example, at the moment, you can pretty much borrow as an investor at around 4%. So we're going to run at a 4% per annum repayment on a 30-year loan. Now, I've covered before on why I think it's so important that we pay principal and interest on a loan and not just the interest repayment. Really, we do want to be paying off that asset and eventually owning it outright. So on a $400,000 loan at 4% per annum, you're essentially going to be paying $352 per week in repayments. In the first year, this is broken up into your interest repayment, which will be $246, and then your principal payment. So the amount you're actually paying off the loan will be $106 per week. As you pay down the loan, like I mentioned, this obviously will shift and you'll be paying more off the principal and less interest over time. Adding our outgoings of the property to our repayments, this $400,000 property ends up costing $494 a week to hold on to, and is returning $400 a week. So your out-of-pocket costs on this property will be $94 per week. So it's not a great buy, but essentially you are actually still making a profit off this property, but not by the time you take off the principal repayments. Now, on this deal, I want to fast forward 10 years into the future. And this is when this deal really starts to come alive and really starts to become an appealing investment. So 10 years into the future, you would have paid down your loan from owing $320,000 on it, taking into account that 80% original purchase price on the $400,000. You would have paid about $70,000 off the loan over this 10 years period, which brings it down to $252,000. Now, taking into account a modest rental growth of just 4% per annum year on year, so the rental price going up by 4% each year, so that's your $400 a week property will now be worth $412 a year after, and so on and so forth. We see compound interest take its effect over this 10-year period. And this property that was renting for $400 per week, at this 4% per annum growth, ends up renting for $592 per week. So it's almost grown by 50% over that 10-year period. And this is where this deal really starts to become exciting, because your fixed costs, your loan repayments, and your outgoings really won't change over that period of time. And this means the property is now netting a profit of $98 per week. So just over $5,000 per annum this property is now netting you, and that's including the repayments off the principal of the loan. If we take into consideration we're now paying less interest, we're actually now paying off $8,000 off the property, and we're making about $5,000 on top of what our costs are, associated holding costs are for that property. So we've gone from a property that is costing you about $5,000 a year to hold on to, including your repayments, to a property that's now generating $5,000 profit, plus you're paying $8,000 off the loan, so your net income off that property is $13,000 per year. So that's really incredible, just the shift that you can have over that 10-year period from a property going as what I'd consider an average investment to something that's now has quite strong rental returns. Imagine what a further 10 years would do on that deal. Your rent continuing to increase over time, and your interest repayments actually dropping over time to a point that you eventually own that property outright, and that $352 becomes pure profit. Or on the flip side, imagine if that property was positively geared from the get-go. So from the get-go, you could cover all your costs associated with that property, including your repayments. How good that deal would look like in 10 years' time. For those of you who have managed to make it this far, smash that like button. I'm glad that you've managed to stick with me through this, and I hope it's made some sense to you just how important time is when you're looking at investment properties, and how the sooner you buy in or the sooner you start investing, the better your returns are going to be into the long run. So the real takeaway I want from this video is that if you are considering buying an investment property, that you consider doing it sooner rather than later, as time will be on your side, and the longer you hold on to that investment property, the better the returns are going to look into the future. Once again, guys, I do put out 2 to 3 of these videos a week, so if you have enjoyed this one, make sure you hit the subscribe button, give me a like. If you've got some feedback, I'd love to see it in the comments, so make sure you leave me a comment below, and I look forward to bringing you some more videos soon.